two funds, one with 12% returns and the other one with impressive 36.99% for the last 12 months. Both are special funds, and get these returns are on the dollar, not the Kenya shillings. These are remarkable returns. So today we compare Mansa X dollar account and Arvocap multi-asset strategy dollar account. For context, a money market fund in US, such as maybe Fidelity, is giving a return of around 4.5% and 4.8%, yes. So these returns for Mansa X and also for Arvocap are awesome returns. Even the 12% for Mansa X, these are great returns even with the level of risk that this investment come with. And for Arvocap, these returns are actually better than what a Kenya shillings special fund is giving. Yeah. So now, where does Arvocap invest your money when you contribute to this fund, and what makes this big difference in terms of return, given that these two funds are similar in terms of operation? Let's find that out. And before we dive in, let me share a brief legal disclaimer. My name is Susan Juguna and I am a financial educator. I share my personal experience in finance combined with thorough research, and the information that I provide here is for educational purposes only. If you choose to invest in any of the funds that I talk about, please make sure that you understand the risk profile of the fund and how your money is being invested in these funds, okay? We often say that we wish financial education was part of our schooling, and thankfully, in this new information age, valuable financial knowledge is freely accessible to all of us. So all you need to do is just hit that subscribe button and share this video with others. Encourage your friends, siblings, relatives to just start consuming financial education, because I believe that this is what makes all the difference. I am telling you, if I knew what I know now today, a few years ago, I would be very far. I would be in a very different place from where I am today. Maybe you'll be the reason why they will get far by just sharing this video or sharing the content that I produce here, or sharing any content about finances that you usually consume. And my promise to you, if you subscribe, is to keep producing valuable financial information to just make sure that we are on the know. Right now, let's compare the two funds. And for those who are new to these funds, those are the special funds. Let me highlight some of the key things that you need to know. Number one, these are multi-asset funds that invest in both local and also in the global markets. They invest in anything that they believe that can make money for you. They can invest in stocks, they can invest in precious metals, they can invest in currencies, they can invest in emerging market, cryptocurrency, any place that they believe that is going to make you money, they can invest in it. They also do forex trading just to make sure, or that is active trading just to make sure that you are making money in this market. These two funds are regulated by Capital Market Authority. That is an important factor to make sure that you are considering when you're investing. And the role of CMA in this is not to guarantee that you're not going to be losing your money, but it's more of an oversight role to make sure that these funds are following the rules of engagement. So usually what happens is CMA have rules for all managed funds to protect you as an investor from concentrated risk. And the regulations emphasize on a few things, actually three things. Number one is diversification. The fund managers, they must spread investment across multiple securities to just reduce exposure to any one issuer or any one asset or asset class, okay? The number two thing that they emphasize on is concentration limits, and here is just that they give caps, or they give limits. Let's say, for example, they often give limits around 10 to 25%, that the fund managers cannot invest more than 10 to 25% on a single company or related entities, depending on the fund type, just to make sure that your funds are not in a single company, and to just protect you. The other thing that they emphasize on is oversight. They have what we call trustees and custodians, and these are required to monitor compliance and report breaches to CMA. Of course, the custodian also holds the money for the fund manager, but ideally they're supposed to create a synergy, or to create an organization that are protecting the investors. And by manage funds here, I mean any organization that collects money from people and invest on their behalf. So if a company does that, they're supposed to be regulated by CMA, and they're supposed to operate within the guidelines by CMA, okay? Now, for Mansa X, they have both a Kenya shillings account and a dollar account, and they decided to compare the dollar accounts. But if you're interested in the Kenya shillings account, I did a video to compare Mansa X and Arvocap Massive Fixed Income Fund. If you're interested, you can check it out, and I will also leave it in the description box. So for the returns, since Arvocap Special Fund started in 2024, I think it's wise for us to calculate the returns for the same period for Mansa X so that we can compare well. Now, here are the returns for both the funds for easier comparison. And now I think the only thing that I need to explain here is year to date. Year to date means returns from January 2025 to June 2025. And I think the rest are last 12 months, that is self-explanatory. As inception to date, that is also self-explanatory. And you can see now the returns are side by side, okay? So from this, you can see that there is a massive difference between the two in terms of returns. And I would like to mention that for Mansa X, the returns are net returns. But for Arvocap, you have to deduct a few things. Number one, you have to deduct an initial fee of 2.5%, then a 2% management fee. Then you also need to deduct a 20% performance charge that is charged on net returns. And I did some calculations, and the net returns amounted to around 24% for year to date, that is January 2025 to June 2025, which is still a significant number compared to Mansa X dollar account, which reported a 6.61% net returns on the same period of time. And remember, both of these two funds, they are not subject to taxation, they are tax exempt. So the returns that I have just mentioned are the returns that you get if you invested in that period of time. Remember that past performance does not guarantee future performance, but it gives you an idea of what to expect in these kind of investments, okay? Now, I think it's time we look at the differences on the areas of investment so that we understand the reason why there is so much difference in returns for these two funds, okay? Remember that these two funds, they have the same strategy of investment. They invest in global markets. They also involve themselves in active trading, where they invest when the markets are rising, and when they are falling, they also do leverage trading. But the assets they invest in are very different. So for Mansa X, these are the areas that they invest in. And for Arvocap Multi-Asset Special Fund, these are the areas that they invest in. From these, you can see that Arvocap invest in micro themes. Yes, they also invest, those are basically government securities. They also invest in artificial intelligence, which is an area that is gaining a lot of traction. They invest in Europe, and in Europe, you can see the assets that they invest in. They invest in digital marketplace, and in digital marketplace, you can see that they have Robinhood markets, they have Coinbase, which is majorly a cryptocurrency exchange, so they invest in cryptocurrency. You can see they are in Uber, and then we have they also invest in China, and you can see even Alibaba Holdings is there. They invest in PGM, which are basically different categories of precious metals, and they also invest in emerging markets. So these are the areas where this fund invests in. And the differences in asset allocations are very clear, and I would confidently say that this is the reason why there is a big difference in terms of returns. You can see that the areas of investment, or where they have put their money, or the money that they collect from the investors, these are areas that we recognize. These are things that we have seen around, or we know how they have been doing. And I know there are individuals out there who have invested directly in these kind of assets. And I also understand that they have not listed all the assets that they have invested in, but I think this gives us an idea of the kind of market or the kind of asset they invest in, right? So if you compare this with Arvocap Multi-Asset Strategy Special Fund, most of the investments are in industries and companies that are not many people are aware of or talking about in terms of when it comes to investment or in the investment perspective. And you can see that their focus are in the new frontier markets. I think this takes us to our next question. how risky is this investment? Do they share the same level of risk? And because now they have the same investment strategy. And then the other question is, do they protect your capital, or how likely is it for you to lose your capital in this kind of investment? Now, to answer these questions, we need to look at the risk profiles of these two funds. While both Mansa X and Arvocap Multi-Asset Special Fund offer similar investment structure in terms of they are both USD denominated accounts, they offer flexible top-ups, and then they also diversify across different assets, and their strategy for investment is the same. They're actually rated very differently on their respective risk scales. So Mansa X is classified as a level 2 on a 5-point scale, suggesting that it is a low to moderate risk investment, while Arvocap is rated a 7 in a 7-point scale, indicating the highest possible risk in the risk spectrum. Now, although this contrast indicates or reflects how different or how each fund manager interprets and communicates the risk, I think we have seen or we have established one thing. We have looked at where they invest in or where they invest the investors' money, and we have seen that these two funds, they invest in risky underlying assets. And I think this risk profile rating just goes to show that Arvocap is more aggressive in the investment, which explains why they are able to give very good returns. But always remember, high risk comes with high potential returns, and that is the reason why Arvocap is rated a 7 in terms of risk, and they're able to give very good returns because it's a risky investment. And I believe that those people who make big money are the ones that are willing to take risk, or are willing to take some risk. And get this, these are calculated risk, not any risk but calculated risk. And remember guys, if you decide to invest in risky investment, you need to make sure that you have some money somewhere in a safe investment where your capital is protected, so that after that you can now diversify to risky investment. That is what we basically call calculated risk, just making sure that you as a person, you have protected your money, so that you can, even when you're going to risky investment, you still have some money somewhere just in case something happened to your money in this particular fund, because I mean it's a risky investment. Okay, so now how likely is it to lose your money or your capital from these two funds? And in as much as these two funds, their strategy is to make sure that they're diversifying to protect your capital, just on their idea of how conservative Mansa X is in terms of where they invest their money, I think the chances of you losing money in Mansa X is actually lower compared to Arvocap multi-asset strategy special fund. And I'm basing this on comparison purposes, not to say that you're going to be losing your capital in Arvocap multi-asset strategy special fund, because now I think I'll have to do another video to just highlight, or to just go through the risk of investing in Arvocap multi-asset strategy special fund, just to make sure that you understand how this fund works. But when we are comparing the two, it's likely to lose some of your capital in Arvocap multi-asset strategy as compared to Mansa X, based on how conservative Mansa X is and how aggressive Arvocap multi-asset strategy is in terms of where they invest your money. Now, before I list other notable differences in a table, let me know in the comment section, if you had enough money to invest in these two funds, which one would you choose? Lower returns with lower risk, or high returns with higher risk? Let me know in the comment section. That being said, here are other differences that you can consider, or you need to consider when you're choosing between the two funds. Let me know in the comment section whether there is a difference that I missed. I really appreciate you engaging with me in the comment section. And maybe just to mention, if you have Kenya shillings and you want to invest in these two funds, you can actually do that, because they're going to do the conversion for you. All you need to do is just to invest the minimum amount as required. Yes, and if you're interested in investing in any fund in Arvocap, you can click the link in the description box, or use the one in the pinned comment. It's going to take you directly to creating an account. And if you're interested in investing in Mansa X, you can reach out to me through this number, and I'm going to direct you on how to invest. Thank you so much for watching. Happy investing. See you in our next video. Bye.